Hello everyone, welcome back to my channel. So this video marks the end of the week number 30 in this road to 100k realized return challenge. This week was very good one, and we were on course to have basically a perfect week because as you can see here, and I can show you also in our scoreboard, we were able to get, and especially ever since the beginning, and keep in mind this was a shortened week, markets were closed last Monday, so we only had 4 trading days this week. Basically we managed to fill out our trades on the QQQ at a pretty good with pretty good premiums, and each and every time the options that the puts that we sold on the QQQ expired worthless. All right, and so this was very good. As you can see here, all those trades were in all of those days, Tuesday, Wednesday and Thursday, the options we sold to expire worthless, except for yesterday, and yesterday was quite a big day, not only or exclusively negative, but for reasons that I'm going to get to in a minute. But yeah, basically we were forced to buy, and again, 300 shares of the QQQ, albeit at a slightly lower price, 535 this time, but still it was a very productive week. And showing here at the scoreboard, as you can see, as we have now the trades in here already, the trades for the QQQ, and this was a week in which we managed to rack up nearly 800,000 sorry that would be nice, nearly 800 euros for the entire week in just 4 trading days. So this accounts for an average of nearly $200 per day, which is very, very good. And nonetheless, we were assigned here on the last day of these shares of QQQ, so there is no harm done. It could be better. We preferred not to have bought those, but still, because the price went down significantly yesterday, yeah, basically we were forced to buy those, given the difference between the strike price 535 and the current, and the stock price at closure is $9.02. Let's just put in here, and this is just a mark-to-market value. This has no bearing on the situation that we are facing, so this is just a number which is going to be here just for us to keep track of how much far off we were in terms of the difference between the strike and the stock price by the time of the closure. This, when we sell back the shares, this will go down to 0 again, and not to 0, but will be positive, showing the actual profit that we did on this particular trade. And so as things stand, we only need to sell these shares at this price, 534.38, to break even on these shares. So no problem at all. We'll see. The only thing that worries me about this is that now we have the shares, and we must keep in mind the following. Next Wednesday, at the end of the day, Nvidia will release its earnings, and so there's a lot of expectation in there. There are some concerns that the growth rates that Nvidia have been racking up over the past few quarters will not take place this time. The expenditure on AI may be decelerating or fading a little bit, and so not only the results will be a major focal point, but also the guidance for the coming quarters. And so it would be very nice that we sell back these shares before Wednesday night, because the earnings will be released on Wednesday after the trading day is closed. So it would be very, very good that by that time we would be out of this trade, because I am a bit concerned that the price or the Nasdaq will go down or further down if the earnings or the guidance do not come up to the meeting the expectations of the investors. And if that happens, I assume that most of the market will be dragged alongside Nvidia down, and so it would not be nice, it would not be a good picture if we still holding those shares. We'll have to wait and see, but yeah, this is where we stand at the moment. For now, as I mentioned, this was a week in which it was a positive one. However, we had some ups and downs, and let's just say that the situation was not completely rosy, or at least in the eyes of the investors over the past week. And why is that? Because if you can see right here, and I'm going to show the weekly graph, and as you see here, even though we sold, and I can show you here, on Thursday we sold a put with a strike price of 536, and we were actually very lucky that we were not assigned on that particular day, because as you can see right here, and this is where the line of the 536 are, as you can see, the QQQ shares were below 536 for most of the day, and only at the end of the day they came back above 536. So the puts we sold were in the money for most of the day, and only at the end they were out of the money, and they simply fell away, expiring worthless, and so we did not have to buy those shares. So this was already sort of a warning sign of the wings of the things to come the next day, which is right here. And the reason for this tremendous fall, I should say, this was around 2% fall, was basically because both business and consumers, and this is a piece of news that is from yesterday at night, close to midnight, and it basically says that business and consumers are starting to have a deep concern that business activity is close to stalling, based on a report that was disclosed yesterday. And so there is some concerns about not only the effects of tariffs, the current inflation situation, which is still not yet fully controlled according to the Fed, and if these concerns materialize over the next coming weeks and months, the economy may have at least some degree of deceleration, and this will of course drag down the shares, meaning the Nasdaq and the S&P 500 and the Dow Jones, which are the main index here in the New York Stock Exchange. Now, this is mostly why this situation occurred. Now, we have to say the situation was not completely bad yesterday. And why is that? Because our Pfizer shares ended up appreciating quite a lot. Now, we were almost, and I was almost making the decision of selling the calls that we had, the 24 call contracts that we had sold at the beginning of the week. I was almost selling them yesterday because they were already trading at 1 cent. But the reason I did not do so was because the premium we received was very low, and if we buy back those at 1 cent, which was a price that it was at that point, there would be some risk. And as you can see here, that if we buy those at 1 cent back and we end up paying a very, very high commission, which can happen because of the number of contracts, which is a pretty big one, it would be possible that this trade would no longer be profitable. And if the commissions were really high, it can happen that this can be even a losing trade. And so I decided to wait until the end of this week to let it expire, and instead wait for the next Monday to sell calls again, making basically the same trade for the end of the next week, to expire at the end of the next week. And this ended up being a very good decision, because basically closer to the end of the day, the Pfizer shares ended up going up, and they ended up, I believe, going all the way up until 26.30, 26.35, something like that. And so yeah, as you can see here, they even got close. At this point they were already at the price we wanted to sell, which is 26.50, but even in here, very close to the end of the trading day, they ended up trading at close to 26.44, 26.45, so basically our break-even price. And so they pulled back a little bit at the end of the day. This was already in the post-trading, but on the post-trading session. But nonetheless, this was a very good sign, because now even if we sell our shares, even if we sell the calls for next week, the premium we will get will now be considerably higher, and this is a very good premium to have. And for sure we are going to capitalize on this, because even if the price of these calls stays where it is, as you can see here, which will not be the case, but still, if it's something around this, it will be a very good premium to collect, because this will be 30 cents per share. So this is times 100 times 24 contracts, and so we will have, just by selling these contracts, we will get $768 just by selling those contracts. And so this is an opportunity that we are not going to miss, even though we are very close to break even, and we want to get rid of these shares, but for sure we are going to capitalize on this. And hopefully at the end of the week the price will exceed 26.50 and the shares will be gone after we collect this very juicy premium. For now, we still have this put with a strike price of 25, which is almost meaningless. This is basically for us to get some additional return, because yeah, it doesn't hurt if the stock goes that low to 25, we'll still get 100 more shares to bring further down our cost basis, so no harm done on that. For next week, our plan is simple: sell these 24 contracts. I already input this in here just to give you some brief note of what's basically going to happen. This is something that we are going to do for sure. Sell 24 contracts on the Pfizer here to collect that amazing premium, and then we are going also to sell 3 call contracts on the QQQ. I'm not sure yet about the strike, because for sure it's going to be the same strike, 535, and because of that we will also for sure not selling an overnight call, because as you can see the premium is very low. And for example, if we extend for one more day, we get 4 times more premium. Here it jumps from 11 to 44, and if we extend for one more day all the way up until Wednesday, it goes from 44 cents to 104, so it more than doubles the premium just by adding one extra day. And of course, if we go all the way up until Thursday, the premium only goes up by around 50%, give or take. So at this point, I don't think it's worth the risk anymore, or not worth extending anymore, and so we'll settle for sure for the Wednesday call, so a 3-day call. Also because at this point we want to, this is our last deadline for us to get rid of the shares before Nvidia publishes its results and its guidance, and so most likely we will sell a 3-day call, or 3 call contracts with a 3-day maturity on the QQQ to collect this premium. So this for sure, I would say 80% or 90% of chances are that we will sell this this 3-day call, and we still collect around $300 by doing so. So yeah, it's gonna be good. Not as good as if the price was higher, but yeah, we have to make do with what the market gives to us. Now, in terms of our realized returns, as you can see, this is the activity statement all the way up until yesterday. And so if we look down here, and this is the realized and unrealized performance summary, here we will see that we have already exceeded $30,000. So we are at $30,230.68, which is good. So we already racked up this much money. And very interestingly, let's see here, if we look at our portfolio analyst at our dashboard, you will see that in here, so this is our current return, 17.91, right? And as you can see here, I'm going to zoom this up a little bit, we have already, and our portfolio is the blue line, we have diverted away, and in a good way, from both the S&P 500 and the Nasdaq. So we now put some daylight between them, and we got closer to the Nasdaq. And so our performance, basically what happened was that even though our performance went down in terms of our QQQ, we still got some premium from it, but it was a performance of Pfizer that really made this difference. It is positive performance, and so that's why we continue to be on the up in terms of our returns, our performance, despite all the indexes have been gone down. And so we got closer to Nasdaq, which was leading the way, which is our best benchmark, or best performing benchmark, and we already put some distance between ourselves and the S&P 500 and the Dow Jones. And so yeah, things are looking good, and I think as long as we remain on this track, on this path, we will continue to do well. For the time being, yeah, basically this is it. We already spoke about next week's plans, so yeah, feel free to leave your comments below. Any questions you may have, also you can leave in the comment section below, or you can also DM me on LinkedIn. And also, of course, feel free to like the video and subscribe to the channel, and we will reconvene next Monday to start the week number 31 in this challenge, and I'll see you there.